Welcome back, everyone. Please be seated and silence your phone. Once again, I encourage you to submit your questions through Slido using the hashtag LAM Forum 2018 and vote for questions already posted. Now, we'll have the panel on financial stability, facing the challenges of the digital era. In this panel, we are honored with the presence of Carlos Fernandez, Governor of the Central Bank of Paraguay, Ernesto Revilla, Head of LATAM of Citigroup and UChicago graduate, Pamela Cardoso, Chief Officer of the Monetary and Reserves Division at the Central Bank of Colombia. Moderating the panel, we'll have Andrea Arevalo, MPP 2015, and Advisor of the Executive Director of the IMF. To begin, we'll have Mr. Revilla's presentation.
Well, thank you very much for the introduction. It's a pleasure to be back. I still get showers in the streets. It's great to see so many good friends from that time, Carlos, and new friends. Thank you to the Latin American Matters, to Evelyn, to Jorge Quintero for the invitation, to all the board. And what I want to do in this presentation is to talk more macro. The panel is about financial stability. Because I always say you cannot have financial stability without macro stability, especially in Latin America. So just to set the context for my fellow panelists, I would like to give you our outlook at Citi. It's very similar, of course, to the consensus outlook of private analysts of the IMF, but just to see how are we seeing the region in terms of economics and financial markets this year. So just to start, what we have right now is a fairly benign, still, I mean, even with what we've seen in the last weeks, fairly benign global economic outlook. What we're seeing is that finally the main economic regions of the world are growing now and synchronized growth. We have growth in the US, we have growth in Europe, growth in Asia. Many of the drawbacks that we had since the great financial recession of low growth and low inflation, now we're starting to get out of that, and the prospects for global growth are the highest in this 2018 of whatever it has been in the last 10 years. Interest rates are rising moderately, so it's still nothing yet to be worried about for emerging markets. And we see relatively moderate and stable inflation in advanced economies. So having said that, and as I said, these last weeks where financial volatility has increased significantly, there are still many risks to the outlook, mainly these four that you can see in the slide. The United States current expansion is already very long. I'm going to talk about that in a second. We have these big trade wars risk and geopolitical risks rising. There are tighter monetary conditions almost everywhere. And we have the return of market volatility. If you've been following exchange rates or interest rates in these last few weeks, the return of volatility is really back. So let's start with the positive. And I want to go to this slide very briefly just to touch on a couple of points. And as I said, this, I hope, sets the macro stage and the economic context for a more deeper discussion on financial stability. So growth remains robust in the global economy. This is global GDP growth, the whole growth. And the red dots are the consensus forecasts that we have for each year. And you can see a very clear pattern in the years before today. We always, and by we mean as the economics profession, we always forecasted relatively high growth, which is the red dot. And what we ended up having was significantly less growth. So every time we had diminished growth expectations, every time we saw new economic data, it tended to be below what we were expecting, and that was a consistent feature of the recovery after the Great Recession. There was discussion of structural stagnation, secular stagnation, low demand everywhere, low inflation. But you can see now that there's a change in 2017, and what we're expecting for 2018, that finally, last year, economic activity was higher than what we were forecasting. So recent data tends to be more favorable, and economic surprises tend to be on the positive side. And the second thing to watch on this graph is that you can see that 2018 is going to be the year of peak growth in the global economy. This is the higher growth that we are going to have since the downturn of the Great Recession. And then in 2019-20, we're expecting that the cycle will start turning. And it will start turning at some point because several reasons. One is that the length of the current United States expansion is already very long. Take a look at this graph. The longest expansion on record, and this is measured from the deepest part of the cycle, from the trough of the cycle. How many months do you have until the peak of the cycle? The longest expansion in the US was 120 months, 10 years. The shortest was 10 months. The median expansion is 30 months. We are already at 109 months, so it's close to 9 years of economic expansion. This has been a long cycle. And just to extrapolate, if by the end of the 4 years of President Trump, we don't have a recession, we will get to 142 months of expansion. So close to 12 years of expansion. The probability is getting lower that this is the longest expansion on record. Although, of course, economic expansion do not die because they are long or because of old age, but because you start seeing imbalances in the real sector, in the financial sector, or already producer and consumer confidence is very high, so it has nowhere to go but down. So we're still not seeing that yet, but in the financial markets, the talk is of late cycle trading, late cycle indicators, and this will happen, of course, at some point in the future. So it's a risk that we have to follow in the next few years. Another risk is trade wars and the increased geopolitical risks. And it's not only a matter of the Trump administration with this more aggressive rhetoric against trade, against NAFTA, against trade with China, but it has been going on also since 2008, since the Great Recession. You can see in this slide, this is the number of trade interventions that governments do in the world. It's just the number of how many times they intervene in trade markets. And we separated here between liberalizing or positive interventions in the blue line and harmful interventions on the red line. Harmful interventions are those that either increase tariffs or put quotas or increase any other non-tariff barriers to trade. And you can see that the trend was already there, and the rhetoric was already there. I mean, there was increased protectionism in the world economy after 2008, very similar to what we had after the Great Recession in the 1930s. And now came the Trump administration, and we have very harsh rhetoric against globalism, openness, trade pacts, and so on. So we're still carefully optimistic that this is not really going to change current trade arrangements too much. Most is, we hope, negotiation rhetoric. Some things are going to change in the margin, of course. But we may be about to get a renegotiated NAFTA, if not today, in the next few days, which might look better in the margin, but not significantly different than what we had in the past. And the rhetoric against China, again, right now it's only rhetoric. It has not translated into actual policy. We need to keep that in mind. So a third risk for emerging markets and for Latin America in particular is that right now we have tighter monetary conditions in advanced economies. Inflation finally is rebounding. This is inflation in the G10, the US, the Euro area, Japan, the main advanced economic regions. And you can see that there was low inflation in the previous year, and the forecast for inflation going forward is relatively close to the targets of the central banks, which is 2% in these advanced economies. And the outlook for inflation is for moderate inflation, not too high, but enough for central banks to feel comfortable in start increasing rates as the Fed has already done. So we are clearly in an environment of increasing interest rates in advanced economies. The graph in the right shows the current level of the interest rates in these countries by these central banks. The red part of the bar is where the interest rate is right now. The gray part of the bar is where we think it will end up by the end of 2018. And the blue part of the bar where we think the rates will end by the end of 2019. So very clearly an environment of increasing interest rates in advanced economies. And this is usually bad news for Latin America. and for emerging markets. Whenever you have a tighter monetary policy in the US, combined with looser fiscal policy in the US, both things, if you remember from macro, both things point to increased interest rates in the US economy, and in general in the advanced economies that we're seeing. And increased interest rates in the US tend to suck capital out of Latin America, and it's usually a difficult environment for emerging markets. So what we've had so far is not so much disruption to Latin America, except for where we are right now, this last these last 2 weeks, and a stronger US dollar associated precisely to increased interest rates in the US, that is depreciating all the exchange rates in Latin America, and that will be important for our panel, because with this additional volatility in the macro environment for Latin America, financial stability questions are of more importance and are more difficult. So this is what I was saying. Is this a term for emerging markets, or is this just a transitional volatility episode? Right now we have a stronger dollar, higher US rates. The things that the market is very closely watching is the 10-year US Treasury yield on the graph in the left. And there was the very specific focal point of 3%. You can see here since mid-2016, we've always had, in these last years, and if you go back, you have the same thing, very low 10-year rates, at some points below 2%. And now, a clear increase in the 10-year rate that crossed 3%, which is the threshold that everybody's watching. And with that, people get more nervous about Latin America, about emerging markets, and money starts flowing back into the US and out of emerging markets. And the dollar index, which is the graph in the right. This is just an index that we can see the strength of the dollar relative to a wide basket of currencies. And what was strange was the strengthening of the dollar since December 2016 until a few weeks ago. If you see that index going down, that means a stronger dollar. If you see it going up, it's a weaker dollar. And what was strange was having such a weak dollar, even with the Trump fiscal cuts and with the Fed increasing interest rates. That was counterintuitive, right? If the US was increasing interest rates and expanding fiscal policy, you would think that you would have seen a stronger dollar. And what we were seeing was a weaker dollar, which was very helpful for Latin America and for emerging markets. But now, that story is finally over, at least for now. You can see that the dollar has turned stronger in the last 2 weeks, and that's why we have the volatility in Latin countries in these weeks. This is just a picture of what has been happening in the last few weeks in Latam. The currencies of emerging markets and Latin countries on the right. The impressive cases, of course, Argentina, which is borderline in another crisis, again, going back to the IMF as we speak. But also the Mexican peso depreciating 8% in only a month, the Brazilian real 5%, and other emerging markets. So very difficult environment for financial markets, and where financial stability questions come back to mind. And just to finish, the environment for LATAM, we are outside from the recent volatility that we are still thinking that it will be transitory and not too much disruptive. In terms of real economic activity, we are very constructive. You can see that LATAM, the red line on the left, is GDP growth in different regions. LATAM was growing at very high rates in the decade of the 2000s and 2010s. Then significant acceleration in growth in LATAM associated to the decreasing price of commodities. The whole region was in recession in 2015 and 16, but now the recovery is very clear, and we're expecting a better 2018 with increased recovery, as you can see on the graph in the right, in most countries. Most of the countries we cover in Latin America will have higher growth rates in 2018 compared to what we saw in 2017. Financial sectors remain solid, but that's a good thing. The bad thing is that it's mostly because they are small. You can see the size of the financial sectors in Latin America in the graph in the left. Other than Chile, most countries, and especially big ones such as Colombia, Mexico, even Argentina, have very small financial sectors, so there's still a lot of scope for growth And if that growth is sustainable with good credit quality, with good regulation and supervision, then this will support growth. If growth in the financial sector is too fast, or in different corners of the financial sector, such as the new cryptocurrencies, which we'll discuss and so on, then we need to talk about the quality of that growth. And the final point in this last minute that I have, thank you. Politics. Of course, it was the topic of the last panel, but all market participants and our clients, big investors that invest in Latin America, are watching politics this year in Latin America much more than the economics. As I mentioned, the economics looks relatively good with a fairly benign global outlook, with good forecasts for Latin America. But we have these big elections, and I'm just going to focus on Colombia, Mexico, and Brazil, that particularly the last 2 months can be market moving and can be market events. In Mexico, for the first time in 30 years, we can have a turn towards AMLO and lots of uncertainties about his economic policy. He's clearly less market friendly than the other candidates. And then Brazil, which is going to be a tougher election because whoever wins needs to do big reforms, particularly on the fiscal side, particularly pension reforms, to ensure the sustainability of Brazilian growth. So that will be the question this year. Is as important that it has economics for financial stability, which is the topic of the panel. And I hope that this just puts into context how important this macro and how we're seeing it, just to start the discussion with the other panelists. Thank you.
So thank you, Ernesto, for setting up the tone of the panel, knowing how the macro juncture is right now is very important to our topic amidst probable volatility coming up in the next few months. So now we'll have Fidel Cano from the Central Bank of Colombia. It will be Carlos Fernandez, who is the president of the Central Bank of Colombia.
Okay, thank you. Good morning, everyone, and thank you, the organizers, for the invitation to come here to my former house, because I used to live here in my house. And it's quite a relief that I don't have to go back to my room where you can touch both walls. We came like 2 days ago. I thought that we went to the wrong city. It was beautiful, shiny skies, warm. Right now, I'm sure I'm in Chicago. It's cold weather there. But anyway, Ernesto talked about the macro view for the region. And we need to remember the macroeconomic growth usually rely on accumulation of labor, accumulation of capital, but most importantly on TFP growth, total factor productivity growth, meaning innovation. That is, innovation is quite crucial for economic growth. It's also highlighted by several professors, including James Robinson in his book, famous book, Why Nations Fail, when he talks about the need for innovation to keep sustainable growth rate across the countries. He talks about institutional also, talks how important is institution in order to promote innovation so we can have economic growth in the long term. And what is true at the macro level is also true at the micro level. Sectors growth due to technology. So the prospect for any sector will depend on how technology affects that sector. Recently, we were talking a lot about the fourth industrial revolution, talking about how technology is changing many different services. For example, I use Uber every time I come here. I can use it at home because we have a strong union for the taxi drivers at home, so there's no way Uber will go there. But in any case, technology is changing many sectors, and technology therefore will change the financial sector too. So recently we have seen plenty of this advance in technology that is changing the shape of the financial sector, and you name it. Depends on the country, you have all these or many other new technological innovation at the financial sector level. Now, as in any other innovation, you do have opportunity and you do have risk. Always. Just to say something about technology and the financial sector, the heavy use of data processing was crucial for progress at the financial sector, but also led to the explosion of derivatives in the market, and then at the end that finished in the big financial crisis in 2008-2009. So it's not for free, it's not lunch for free, the use of technology in all the sectors. So we always need to balance what are going to be the opportunity they are opening and the risk. For opportunity, you can go there to the literature and you see many of them, like you are saving transaction costs using the technology. You also can grant more access to people who are being left aside by the normal or typical banking sector. You also improve security of the transaction and so on. But of course there are risks, and I don't want to go deep into all those risks, because I think it's very clear how disruptive it could be when you have a breach in the security level of the technology used by the banking sector or the financial sector in our countries. So this is a balance. Everything, I mean, the first thing we learned here in Chicago was cost benefits, and you have to do the analysis, and this time the use of fintechs or the use of technology in the financial sector have also cost and potential costs and potential benefits. So as a policy maker, we have to be very careful in what we do going forward with this. But for Latin American countries, it is a great opportunity, the use of fintechs. Our financial sectors are quite different from those in developed countries. In our countries, Ernesto was showing that only Chile is an exception. In all other countries, the average size of the financial sector is quite small. So it's not going to be possible to use the traditional banking sector to reach everyone in our country. Like in Paraguay, or for example in Brazil, just to say something different. It's impossible to have a branch in every single city in Brazil. It's going to be quite costly. So we need to find innovation we need to use innovation in order to facilitate access to the financial sector to all the population in our countries. We always find it at the central bank that we need to control inflation, and for some countries to also control the stability of the financial sector when we have the bank superintendency in our hands. But I think that something we are forgetting as a policymaker at the central bank is the need to really promote financial inclusion in our economies, because it's quite important. When people ask me about how the central bank is contributing to fight poverty in Paraguay, I mention two things. The typical one is we are controlling inflation, because inflation is a very regressive tax affecting mostly the poorest part of the population. But also I mentioned that we are promoting financial inclusion, and financial inclusion is the crucial way to really fight poverty in our countries. Therefore, we need to be wise enough in order to facilitate the use of technologies to promote financial inclusion in our countries. Of course, this is not really very easy. First, and I was talking to my colleagues here at the panel before coming here, it's not easy because what I call, or what some people call the establishment, is not favorable to innovation because it's really threatening their position in the financial sector. Usually, and I'm sure the next panelists will talk about, banks do not like a lot of competition. Sorry, Ernesto, for that, but anyway. They do not like a competition, especially from outsiders. And fintech is all about outsiders of the financial sector. So it's not really easy to implement more financial inclusion through fintechs. But in any case, as a policymaker, we need to move forward on that. If you look at the literature, it's not easy because you can see that in order to promote financial inclusion, you really need to facilitate through regulation that. But sometimes a relaxing regulation could be or could jeopardize financial stability on the other side. Again, costs and benefits. So we need to balance again how much we need to relax regulation in order to promote financial stability, to promote inclusion, financial inclusion, and fight poverty through that. And on the other hand, make sure that the relaxation on regulation is not going to affect financial stability down the road. But it's possible. I think it's possible, even though when you are negotiating with banks, probably they will say, if you really use the phone to do transaction, that is promoting, for example, money laundering, or they are going to be granting credit by an institution that is not being regulated by the central bank. I mean, the list of problems that they present usually on the use of fintech is huge. So you need to be careful on your decision. Of course, you need to listen, but you have to do what is best for the big part of the population in your country. Even though it could be costly with your relation between the banks, it's not very easy to implement. I don't want to go too deep. I think I have 5 minutes. Yeah. It's about what we did in Paraguay with fintechs and also promoting financial inclusion. And trying to also, at the same time, secure financial stability. Just a few things. In 2014, we passed a regulation by the Central Bank of Paraguay regarding the use of electronic means of payments. It's a whole regulation basically on the transfer of money using the cell phone. Just to give you a picture of how important is the telephone that is not actually a telephone anymore, that people use there not to talk. It's for WhatsApp, for Facebook, to transfer money. That is not a phone anymore. That is something else. In Paraguay, there are around 800,000 accounts at the banking sector. The number of people using cell phone for transferring money is more than 1.3 million. So it's 50% larger than the number of checking accounts, checking and saving of all accounts in the banking sector. There are more cell phones in Paraguay, more than 7 million cell phones than the population itself. So the potential for the use of this technology, I mean, you don't have the cell phone here, but the use of the cell phone in order to promote financial inclusion is incredibly high. And I think that Paraguay is not an exception in the region. We need to have an open mind. We need to have an open mind in order to really use, as in any other innovation, all the advantage that we can take from that innovation in order to really fight poverty through financial inclusion. But at the same time, of course, we need to be aware of the risk that that technology could bring to the economy. Probably during the panel we're going to talk a little bit more about risk regarding cyber currencies, for example. That is totally another set of fintechs that, and we need to address all the risks, especially that related to consumer protection. Because in Latin America, we are very good at many things like playing soccer, but also to steal money from others through schemes. And really, we have seen recently in Paraguay and in Brazil something called D9, that they were transferring soccer players around using fintechs. That was a stealing scheme. for many people over there. But we're going to talk about cryptocurrencies later down the road. But I have to give you, for example, the official quote of any government that is not money, because it cannot fulfill the different quality of money, that is store of value, mean of payment, unit of account. This is the quote. And we have to go deeper into that. But just to conclude, fintech is a great opportunity to our countries. If we use that wisely, it's going to imply a big step forward towards fighting poverty in our societies. If we don't use it, we're going to end up with a big financial crisis, like happened in the war in 2008 and 9, or happened in Latin America economies during the 90s. So it's in our hands. In our hands, meaning the hands of not only policymakers, but also for the user. The users or the population, society also has to have a voice, because otherwise we're going to finish us with regulation that will favor certain groups only against what is important for the biggest part of the population. And I'm going to stop here. Thank you very much.
So thank you, Carlos. I think that was a very interesting talk about how fintech is relevant for Latin America, and also the Paraguay example that you gave a lot of the context of the fintech and digital discussion around the policy arena. So next we will have Pamela Cardoso from the Central Bank of Colombia.
Okay, thank you very much for the invitation. So I'm going to talk about fintech. Fintech is just a short word for financial technology, and financial technology is not something new for us. Examples of all financial technology are, for example, credit cards or cash machines. In my talk, I'm going to concentrate on this fintech in Colombia. First, I'm going to talk about fintech within the financial sector, then about fintech outside the financial sector, the financial system, and I'm going to talk about fintech regulation in Colombia, most specifically about crowdfunding. And at the end, I'm going to tell you the messages that the central bank has gave to the public regarding cryptocurrencies. So in fintech within the financial sector, I'm going to concentrate on CEPES, which are some new entities in Colombia, and in immediate payments. CEPES are deposit and electronic payment societies that were created by Congress in 2014. So far, we do not have any of those already working with the public, but we have 4 of them already established. And these entities, they can receive cash, and they can provide transfers, electronic payments, and deposits, electronic deposits. Of course, we have companies at the moment that they receive cash and provide transfer. The problem is that they are very expensive. Those transfers are very expensive, and they are not allowed to provide electronic payments or deposits. So these institutions, the CEPES, they cannot lend, and they have a light regulation. Therefore, we expect them to offer services to the public at a low cost. And in that way, we hope that they provide a friendly entrance to the financial system. The thing is that in retail payments, the favorite method of payments is the cash. 90% of retail payments are done with cash. Electronic payments is just 1%. And Colombia is missing immediate payments. Immediate payments are payments that are offered 24 hours a day, 7 days a week, and that when we transfer the money, the recipient gets the money right away. Colombia doesn't have that. So the central bank is working on that. this is not something new. Some countries, they already have immediate payments. So there was a discussion of who should provide this infrastructure, the central bank or a private initiative. Finally, it was decided, the private sector decided that they are going to provide immediate payments. They are already working on the infrastructure. First, they are going to offer P2P, which are person-to-person transfers, and they are going to be small amount transfers. But the other condition is that we need a low cost for those transfers. At the moment, transfers are very costly. I have some examples there in the slide. But the good thing is that banks already agree to provide these immediate payments, person to person, at no cost. They are not going to charge the other bank for transferring the payment. But the short-term challenge is that those are just P2P, but we also need P2B, which is person-to-business payments. So I think that's a short-term challenge. We expect Colombia to have these P2P immediate payments at the beginning of next year. So the next step will be this P2B. And another short-term challenge for the central bank is to understand how fintech has affected and might affect the financial system. And this is something that we have in our current strategic plan. Regarding fintech outside the financial system, here in the graph, so the first one that has the name is LAM Alternative Finance. Those are lending through financial platforms outside the financial system. And as you can see there, Colombia is not that important. Colombia is the red area. So crowdfunding is not crowdfunding, but these lending platforms are not that important yet in Colombia. In comparison to Latin America, and if I compare that 11 million with credit loan, with banks loans, that's just 0.008%. But we know that this might grow. Most of that alternative finance in Colombia is concentrated on balance sheet consumer lending. So those are firms that with their own capital, they lend to consumers. And the other 42% is crowdfunding for business. So they intermediate funds. So they get money from investors and they provide loans to businesses. On the other hand, fintech is very important. Fintech companies are important in Colombia in comparison to Latin America. The first country is Brazil, then we have Mexico, and then we have Colombia. So Colombia in 2016, 2017 had around 82, 84 fintech companies. Most of them are companies that provide payment services and transfers, for example, for remittances. Moving into fintech regulation, crowdfunding, Colombia doesn't have a specific fintech regulation, but what we have is that the only entities that can receive deposits from the public are the credit establishments and the state-based that I mentioned before. Colombia is analyzing, for example, Mexico regulation, because as we are part of the Pacific Alliance, if the government wants, if the Congress wants to issue a fintech regulation, we want that regulation to be homogeneous among the countries so that we can have a better transfers between the Pacific Alliance. The government published a decree, but just for crowdfunding, for comments. This hasn't been enacted, but the decree wants to regulate electronic platforms that offer crowdfunding for projects. So the first objective is to provide consumer protection. So for example, they said that crowdfunding platforms must publish the rating methodology for projects. They also established that these platforms can only intermediate resources. They cannot lend with their own equity. Those platforms must be supervised by the financial supervisor, which supervises banks. One important thing for the central bank is that it is established that these platforms must report the information to credit bureaus, and that's important in order to be able to measure credit indebtedness among firms. And we also established some limits. For example, projects can only lend from one platform, and they have a maximum amount that they can lend. And also, in order to protect investors, they established some maximum amounts that the investor can put in those crowdfunding platforms. So if you have any comments regarding this decree, I can transfer them to the government. It's something that is on work right now. And to end, regarding cryptocurrencies, in Colombia, residents can invest freely in cryptocurrencies, but this is not an asset allowed for financial institutions. Well, this is similar to the position of Paraguay. Cryptocurrencies do not hold a foreign currency or security status, but rather belong to the general and unregulated and warranty assets available for investment in the economy. And the central bank has been very vocal in warning the public about the inherent risk of investing in unregulated cryptocurrencies. So if you go to the central bank, Colombian Central Bank webpage, you see that link. And if you go into that link that says, be aware of cryptocurrencies, you will see these type of messages. You will see 5 videos that they have these messages. For example, they will say, not good to be true, be careful, you don't know who's taking your money. So we just want to aware the public regarding the cryptocurrencies risk, because we don't want to have a problem that the consumers will have a problem and then they will go to public authorities saying, oh, I didn't know, please rescue us. We want to avoid that situation. So cryptocurrencies, they work under a blockchain platform. So this blockchain technology, that is a new thing for all of us. And at the central bank, there's a current work because this blockchain technology might be good for services provided from the central bank. For example, the payment system, or the central bank is also the custodian of public bonds. But we are a small country, so what we are doing is reading everything that other central banks from more developed countries are doing regarding that, just to be on top of the new things that this new technology can provide from the central bank point of view. Just to understand the technology, the central bank, with other Colombian private banks, play in R3. R3 is a private firm that offers open source code based on blockchain. And we think that if cryptocurrencies become very important for the economy, that might pose a risk for the economy. And from the central bank point of view, the challenge is how to monitor these flows among economies, and also if the central bank wants to impose capital controls, I don't know, under this new technology without borders, how can that be done? So that's a challenge for us. Thank you very much.